Hey, hey, hold on a second. Before you keep scrolling, I need you to hear this. If you are 65 or older and you're on Social Security right now, what I'm about to share with you in the next few minutes could genuinely change your financial life. And I mean that. See, I've been talking to seniors all across America. Good, hardworking people. People who paid into this system their entire lives. And you know what I keep hearing? I had no idea I was missing money. Over $14,000 a year. Just sitting there, unclaimed. Because nobody told them, and that breaks my heart. It really does, because this isn't charity. This isn't a handout. This is your money. Money you earned. Money the government actually owes you right now. But here's the scary part. There is a 2026 deadline. And once that window closes, that money, it's gone forever. You can't go back and claim it. Now I'm talking about things like spousal benefits, survivor payments, retroactive claims, delayed retirement credits, benefits that can stack right on top of what you're already getting every month. Most people have never even heard of these, but today, I'm breaking down every single one, step by step, plain and simple. No confusing government language, no runaround, just straight answers for people who deserve them. So if you're ready to find out what's yours, hit that like button right now, and let's get your money back. So let me start by asking you something simple. When was the last time someone sat down with you and actually explained your Social Security benefits? Not in confusing government language, not in a thick booklet that nobody reads, but just clearly, honestly, like a real conversation between two people. For most seniors I talk to, that conversation has never happened. And that is a serious problem, because the Social Security system, as helpful as it is also incredibly complicated. And buried inside all that complexity is money. Real money. Money that belongs to people just like you. So today, that's exactly what we're going to do. We're going to have that conversation. And by the time this video is over, you are going to understand things about your Social Security benefits that most people, even people who have been collecting for years, simply don't know. Let's start from the beginning. Understanding why so many seniors miss out. Here's something that might surprise you. The Social Security Administration manages hundreds of different rules, programs, and benefit types, and they are not required to tell you about all of them. That's not me being dramatic. That is simply how the system works. You have to know what to ask for, or you don't get it. Think about that for a moment. You spent decades working, paying taxes, contributing to this system every single paycheck, and now, in the years when you need it most, the system expects you to navigate all of this on your own. That's why so many good, deserving seniors end up receiving far less than they're actually entitled to. Not because they did anything wrong, but simply because no one ever walked them through the full picture. And that's what today is about. Walking through that full picture together, the spousal benefit. Most couples don't use correctly. Let's talk about spousal benefits first, because this is one of the biggest areas where money gets left on the table. If you are married, or even if you were married in the past, there's a very good chance you qualify for benefits based on your spouse's work record, not just your own. And here's why that matters so much. Let's say your own Social Security benefit comes out to around $800 a month, but your spouse, or your ex-spouse, worked a higher paying job for most of their career. Their benefit might be $2,000 a month or more. As a spouse, you could be entitled to up to 50% of their benefit. That's potentially $1,000 a month, compared to the $800 you're currently receiving. That difference adds up to thousands of dollars every single year. Now, a lot of people hear this and they think, well, my spouse is still alive and collecting their own benefits, so this doesn't apply to me, but that's not always how it works. You can collect spousal benefits even while your partner is alive and collecting. The rules around this are specific, but the opportunity is very real. And here is something even fewer people know. If you are divorced, you may still qualify. If your marriage lasted at least 10 years and you have not remarried, you can claim benefits based on your ex-spouse's record without them ever knowing, without it affecting their payments in any way. This is a completely separate entitlement that belongs to you. Survivor benefits, the safety net. nobody talks about now. Let's talk about something a little more sensitive, but incredibly important. Survivor benefits. If you have lost a spouse, first, I am truly sorry. That kind of loss changes everything. But in the middle of all that grief, there are financial decisions that need to be made. And unfortunately, many widows and widowers make choices in those early months that cost them significantly in the long run. Here is what you need to know. If your spouse passed away and they were collecting Social Security, you may be entitled to receive their full benefit amount, not a portion, the full amount, especially if their benefit was higher than yours. And this is where it gets really important. You do not have to switch immediately. You have options. In some cases, it actually makes more sense to collect your own reduced benefit first and then switch to the full survivor benefit later when it reaches its maximum amount. In other cases, the opposite strategy works better. The point is, there is a strategy here, and without knowing it, most people just make a quick decision in a very emotional time, and they live with the financial consequences for the rest of their lives. If you are in this situation, please do not make that decision without getting the full picture first, because we're talking about potentially hundreds of dollars more every single month for the rest of your life. Delayed retirement credits. The reward for waiting. Here is another powerful concept that not enough people understand. Delayed retirement credits. Here's how this works. You become eligible for Social Security at age 62, but if you claim at 62, you receive a permanently reduced benefit. Every year you wait past your full retirement age, which is currently 67 for most people, your benefit grows by 8%. 8%. Guaranteed. Every year. Think about where you can get a guaranteed 8% return anywhere else in today's world. You can't. This is one of the most valuable financial tools available to American seniors, and yet so many people claim early without ever understanding what they're giving up. Now, I want to be clear. Claiming early is not always the wrong decision. For some people, it makes complete sense. If you have health concerns, if you need the income immediately, if the math works out differently for your specific situation. But for many seniors who are still relatively healthy and have other sources of income to draw from, waiting even a year or two can result in tens of thousands of dollars more over the course of retirement. This is why understanding your personal break-even point is so important. That's the age at which the higher monthly payments from waiting actually overtake the money you would have collected by claiming earlier. For most people, that break-even point falls somewhere in their late 70s, and with life expectancy continuing to rise, many people are living well past that point. Retroactive benefits. Can you claim money from the past? Now, here's something that really surprises people. In certain situations, you can actually claim Social Security benefits retroactively, meaning you can go back in time and collect payments you were already eligible for but never claimed. This typically applies to people who were past their full retirement age when they finally applied. In some cases, the Social Security Administration will allow you to receive a lump sum payment covering up to 6 months of back benefits. Now, this sounds amazing, and in some cases it genuinely is. But here's the important thing to understand. When you take that retroactive lump sum, your ongoing monthly benefit gets adjusted down. Because essentially the government treats it as if you claimed 6 months earlier than you actually did. So once again, this is a situation where the decision looks simple on the surface, but it has real long-term implications that depend entirely on your specific circumstances. The right answer for one person might be completely wrong for another. The earnings test, a trap that catches many people off guard. Let me tell you about something called the earnings test, and this one catches a lot of people off guard. If you are collecting Social Security before your full retirement age, and you are still working, the government may actually reduce your benefits based on how much you earn. For every $2 you earn above a certain threshold, they take back $1 of your Social Security payment. Now, before you panic, there are a few things you need to know. First, this reduction is temporary. Once you reach full retirement age, the reduction stops. And actually, the Social Security Administration recalculates your benefit to give you credit for the months when your payments were reduced. So you do get some of that money back eventually. But in the short term, this can catch people completely off guard. Someone who retired early, started collecting, and then went back to part-time work might suddenly find their monthly Social Security check is much smaller than they expected. Sometimes it disappears entirely for a period of time. Knowing this in advance allows you to plan, to decide when it makes sense to claim, when to keep working, and how to structure your income in a way that maximizes what you receive. Medicare premiums and your Social Security check. Here's another piece of the puzzle that many seniors don't fully realize until it happens to them. Medicare Part B premiums are automatically deducted directly from your Social Security check. In 2026, those premiums have increased again, and depending on your income level, you could be paying even higher premiums due to something called IRMAA, the Income-Related Monthly Adjustment Amount. This is an additional surcharge that higher-income seniors pay on top of the standard premium. But here's what a lot of people don't know. If your income has recently gone down due to retirement, the loss of a spouse, or any other life change, you can actually appeal this surcharge. You can request that Medicare use your more recent, lower income to calculate your premiums instead of the older income figure they have on file. Many seniors successfully reduce or eliminate this surcharge by simply filing the right paperwork. But again, you have to know to ask. Social Security and taxes, yes, your benefits can be taxed. This one genuinely shocks people. Your Social Security benefits may be taxable. Up to 85% of your benefits can be subject to federal income tax if your combined income exceeds certain thresholds. Now, I know that sounds upsetting, but here's the good news. With the right planning, you may be able to structure your income in a way that keeps you below those thresholds and reduces or even eliminates the tax on your benefits. This is especially relevant if you have retirement accounts like IRAs or 401k plans. The timing of when you withdraw from those accounts and how much you withdraw can directly affect how much of your Social Security gets taxed. It's called tax bracket management, and it's something that can genuinely save seniors thousands of dollars every year. What you should do starting today. So after everything we've talked about today, what do you actually do next? The very first step is to create an account on the official Social Security Administration website at ssa.gov. It is completely free, and once you're logged in, you can see your full earnings history, your estimated benefit amounts at different claiming ages, and all the records the government has on file for you. Review that information carefully. Look for any errors in your earnings history, because mistakes do happen, and every error in your record could mean a lower benefit than you're actually entitled to. The second step is to think carefully about your own situation, your health, your other sources of income, your family situation, whether you're married, divorced, or widowed. All of these factors play into which strategies make the most sense for you personally. And the third step, if you feel overwhelmed or unsure, is to speak with someone who specializes in Social Security planning. Not just any financial advisor, someone who specifically understands the rules and strategies we've talked about today. Because the difference between a good decision and a poor one in this area can be worth tens of thousands of dollars over time. You worked your whole life for this. You paid into this system for decades. You deserve every single dollar that belongs to you. Don't leave it on the table. Don't let a deadline pass you by because nobody told you in time. That's why videos like this exist, because you deserve the full picture. If this helped you today, if it opened your eyes to even one thing you didn't know before, please share this with someone you care about, a friend, a family member, a neighbor, because chances are they need to hear this too. And if you haven't already, hit that like button. It helps more seniors just like you find this information before it's too late. Take care of yourself, and I'll see you in the next one.